All right. So first off, let me do this. Boom, boom, boom. Go with this one. All right. So for this one, this is the final one, the graduation, the Holy Grail. Well, everything is the Holy Grail, but yeah, this is just the last of it. So a lot of the times I can see that um I'm not gonna say who, but a lot of the times you guys are taking trades outside of just outside the times and just random times in the market. And the purpose behind this is to allow you to trade. I mean, you can trade each session, still go along with the times. I wouldn't recommend it because at that point you're treating it like a job. It's not supposed to be like a job. It's supposed to, provide you freedom. So if you are up beginning New York, trade New York. If you can trade London, trade London. You can only trade Tokyo. I recommend you do what is it, CHF JPY, or any JPY. Even GJ moves good around Tokyo, but like find something that moves good in Tokyo. Like I'm not gonna say which one moves the best because I mean that's what you guys is supposed to research for, but it's definitely a lot of stuff that's meant for different sessions. You could trade it all, honestly, New York, all London, but sometimes you get more liquidation through certain sessions. So with that being said, from this point on out, starting February 1st, I want you guys to find a session, stick to it. Only trade that session. Like I said, you only need to be in the market for on the charts for not that long. Cause like right here, if you get into the move at 1330, if 1330 doesn't take off right away and it's still consolidating, just close out the trade. Would depend on where it is, honestly, but just close out the trade and enter at 1430. If 1430 doesn't give you an entry, which it should give you entry, honestly, I'm not gonna lie. But if it doesn't, then 1600 will be. But those are just the time. So it's kind of like if 1330 doesn't leave his zone instantly, then 1430 is gonna be the next step. So even if you look right here, where's it at? 1430 right here. Where is it at right here? I'm pretty sure we have a 1430 somewhere right here. 1430, and then I think 15 was for the reversal. No, 1600 was for the reversal. So it's kind of like, you kind of like have to use common sense in a way because it's like if 1400 is right here and we already took out the highs of Tokyo, then we will have to take out either the discount of Tokyo or the lows of Tokyo. So it's kind of like, why would you continue to hold a trade longer? Um, it's like, why would you hold a trade longer for 1400 when your roadblock is at the bottom range of Tokyo? So it's kind of like it doesn't really make sense like that. But that's why I say like sometimes people just get caught up in the time. They'll be like, what is it? They'll be like 1430s right here, and then it comes up. So it's like once 1430 already makes that range, and we kind of make like a lower high, just like that, well, their lower high, that's basically like, just think of it as like your FTC. So then once that comes around, sometimes it'll come right back. I'm pretty sure like you guys in the old mentorship, the double flat bottoms, but it'll come right back just to grab liquidity from like the basically just to stop out that range almost in a way. Sometimes it can actually take it to like make an equal low, some people may call it. But once you get that and like it's a reversal time, like that's your key point to actually when start closing your trade because it end up reversing on you. So it's kind of like you have to like clearly see on how far to hold that trade. So if we're right here at, let's say, 1430, even 1330, but let's say 1430 right here. Yeah, 1430 gave us our entry, 50 pips or more. That's good. So no, this is less than 50 pips. So if you look at this, it's kind of like your daily opening is right here. The only reason that we're not going to take out the discount or the lows of this Tokyo range is because if you look, this was what tool should I use for this? I'll use the trend line tool. If you look, this was the actual range that closed above here, continuing that structure. So now once you have a very bullish range or bearish range, depending on where you are, and we do close above the structure, that right there is showing you the amount of strength that the market is occurring right there. So it's kind of like think of it this way. If you go to like the supermarket, or not even the supermarket, if you go to, let's say, purchase something and you spend a lot of money on it, you don't want it to go to waste. So it's kind of like allowing it to go to waste when it dips beneath that structural point to where you have that heavy flow of a trend that closes above or underneath continuing that structure. So it's kind of like if you want to go ahead and waste money, then yeah, you can trade it beneath here. But it's kind of like, why would you do that in a sense? So that's where the whole protected lows come in for that factor, because you have to remember that whenever you have a huge price range that comes up and we do close above highs. So remember, we're never going to pull a range from where the bears were. We're going to pull a range from where, the bulls were. We're going to pull a range from where the bears are right here, just like that. So that's going to let you know when we actually continue that structure. So now we continue that structure. Now the market is going to slightly start taking a shift as she did. And then if you look right here, this is where we get in. This is where it was beautiful right here. And this is what I mean by the whole structural point does not exist. So if you, the regular retail structure point, if you look at an area like this, a lot of people would have been like, okay, let's go ahead. This is our higher low. Normally the first higher lows you never want to buy off of. But like if you look right here, remember I told you guys in the previous Zoom, the 50% that a lot of smart money traders like to take, never take those, because what's going to happen is they're going to get wiped out later on. So if you look at this whole entire range, if you look, we have no type of POI that the higher low actually created. So now this is going to be a perfect example. Let's just say right here, we're at 1330. So we're at 1330. Let's use a few of our confluences. So this first confluence is our trend, continuing structure. The second confluence is going to be the 50%. Let me do this so I won't confuse you guys. 50%. There we go. So that's 50%. The third confluence, let's just say that if you were in a buy right here, your third confluence will be 1330. Third 1330. I guess we can call it that. Yeah. So 1330. If you look, we do have POIs. We do have POIs in this area. So we would just literally wait and see how this third confluence will actually, rebound off of this area. So now we go ahead and pierce it. Remember I told you guys, whenever we do pierce methane candle, sometimes, actually I want to say like 90% of the time, 95% of the times, price will just come right back. It could be an hour later, it could be 2 hours later, but it's definitely not worth it to move your stop loss thinking that you're going to be safe. If you're scalping it, yeah, I don't see anything wrong with it. But if you're like intraday trading it or swinging it, definitely don't do that. So now, as we see, come over here, we pierce through that. So now, if you look at this area right here, where is it at? This is 1330. 1330 did not hold for that sale setup. So as of right now, it looks like we may continue the structure right there. So now, if we look at this time, this is 1415. 1415. Remember I told you that 15-minute wick will always kind of like be like your hunter's candle in the way. If you're not coming off of range, like prime example, like this one right here, we didn't really have no hunter's candle. Actually, yeah, we didn't take it out. So yeah, this technically wouldn't even be a hunter's candle. So if we come right here, 1430, instantly it just drops. So now, which is a key factor too, because a lot of people, if they were to try to move their stop loss, let's say if their stop loss is right here above this, and they tried to move it above this high right here, I mean, you got stopped out like 16 pips. So that's why I say never move your stop loss. So then now after that, what's happening now is now we're taking out what people thought this was a higher low. It was never a higher low. We never rebound off of a POI. We just randomly rebound off of a 50%, maybe even 61. We just instantly rebound off of the fib numbers that a lot of retail traders use. Because why? It does go back into science with the whole ratios, but in all honesty, it's kind of like, why would you buy 50% of the market? It's kind of like, would you rather have a mixed dog or a full breed? So it's kind of like in that way. When you're getting half of it, you're not getting the full structural point, just like the 50% is. So it's like now we do have POIs over here. And if you look, we have a POI right here. We do have our methane candle, the bearish one. We do have our methane candle. And we do have a daily opening. And we are in the discount. So, I mean, that's already 3 confluences right there. What's the point of going back all over here to see what happens? No, you don't want to go back that far. Going back that far is pointless because the market's already printed. Just like whenever you see like, it's not even smart money people, like whenever you see like people marking up a chart and they have like the trend line right here saying bull, and then like they have like the whole, what else do they use, like support or whatever this stuff is called. It's kind of like, why are you marking all that up? The market already prints it. It's no point of that. If you're back testing it, then yeah, I can see that, but it's already printed. This has nothing to do with this right here because we've already came to consolidate orders right there, a major conflict. So it's kind of like, this is the range that we have to worry about now. This is the range. So now once we go ahead, what time is this? Believe it or not, sometimes even at 22, right there on the dot, sometimes it can actually take off. But like I said, it just depends on how your spreads are. So now if you look, this is where my actual entry came from. If you look right here, we filled that POI, that methane candle fully. The more of the liquidity it gets from that methane candle, the higher price will go, or the lower price will go, depending on the structural point that you're in. So this is another perfect example right here. Let me go ahead and replay this back. So let's just say that if you're in a sale, normally I would do this on the 5-minute time frame. If you are in a sale, let's go to this right here. If you are in a sale and the market is doing something like that, so you can instantly see right here is where we actually have our low, because this is actually, I'm not even going to use this. This is Tokyo. Let me use a better example. 1900, because a lot of people get lost at 1900 sometimes. So now if I'm in a sale, let's just say if I'm in a sale right around in this area, you see how we're creating a large amounts of retail support. So I'm gonna use that in a way. So if we're looking at this area as retail support, if we look right here, I'll just do this right here. If we look at this whole entire area as retail support, the purpose behind this is all of this consolidation will have to, I'm pretty sure a lot of you guys heard rally-based rally, which is actually really beneficial, but it's kind of like when the market is consolidating those orders, they call it moving sideways. It's not necessarily moving sideways. What's really happening is a lot of these it's not a stop hunt. Traders always get that mixed off, saying, "Oh, the market stopped me out." The market, no, it's because people have been taught the wrong things. What's really going on with the market is because whenever you imagine like you collecting baseball cards, the market is collecting baseball cards all in this area. So it's kind of like the more and more baseball cards you collect, you have so many, and then you realize that you have so many better ones, aka the better move, which will be to the upside. So it's like you have so many better cards now. So it's kind of like the old cards that you first started collecting, you don't really want. So you kind of like got to let those go. So the purpose behind this is kind of like the Tokyo session. You have all this consolidation. It's kind of like you have so much consolidation, you kind of like going to get rid of like the stuff that you really don't want, which is basically, you know, like taking out the lows of Tokyo, taking out the highs of Tokyo. So all of that collection that you're doing, you're finding that one card that you don't want, that you're keeping. So this is like throwing away in the trash. And then, you know, now you're having like a huge collection of cards and everything like that. And then now you're just going to go ahead and, you know, go in a direction that you actually really want it, you know, if that makes sense to you guys. So now if we're looking at this, let me go ahead and take this off. What time is this? This is 1855, 1855. I took that off. There we go. All right, so this is 1855, 1850, I mean. So then if we look at that, that's 1855. So 1900 right there. So you see how we're like basically like having a hard time trying to break this level. We're having a hard time trying to break this level. It doesn't know whether it wants to continue up or go down. It doesn't know whether it wants to continue down or go up. But we already know because as of right now, she's making a bunch of retail support. So, and this is really perfect for Tokyo too, because what's really going to happen is sometimes you will get like a POI, like right here, this is perfect. You'll get like actually not even right here, because I already marked the POI right here. Let's say you get a POI right here. So if you have Tokyo doing something like this, and this is where your exit point will normally, yeah. If you have Tokyo coming in, actually this is New York. If you have New York going like this and then Tokyo coming in like this, now it really just made a range of consolidation. So now we're really taking out the New York lows. So now we're taking out the New York lows. Now we're going to come to our original POI, stop out everybody that was trying to buy in this consolidation point, and then continue to make up our move. So now our exit point would literally be right before our swaps kick in, which would be, like I said, if I don't see any movement at 1900, I'm exiting. So this is a perfect example. Watch this. So you see how the market still failed to break this whole entire area right here. I'm closing. It should have moved at least 1930. But I'm gonna be honest, like I said, like 1900 right here, it wasn't really a good enough pump for me. So especially like a lot of people, they'd be like, the market is melting, the market is melting. They'll look at the 1 minute or the 5 minute, and then it'll move like 20 pips. Like that's nothing really. Like, you know, like a good scalp, but the market isn't melting or pumping. It's not. So this is over exaggeration. So then now, if we look at this, the market's still taking a long time. So just say if I was still holding this trade right here. So if I was still holding this trade to sell 1915, 1930 is max. 1930 is max. That's 1925, 1930. So we're having a hard time trying to break this level. So this level is not meant for us to break right now. This level is meant for us to actually consolidate this movement. So now what's going to happen is, let's go ahead. Where we at? Tokyo then credits the range right here. And now we have our POI that was right here on the 15 minutes. So then if we look, taken successfully, DXY opening was at 1. So right around here. DXY openings sometimes have a lot of manipulation too, honestly. I only entered here because, like I said, like DXY opening after this was like a little shy off from it. So that was the only reason I entered. I normally don't enter in Tokyo, but I was just like, the POI is right there anyway. So it's kind of like we can actually just, you know, this can be the discount of our Tokyo range. I did expect it to come back. That's why I did not move my stop loss. So it's kind of like when all this consolidation hit and I entered at the discount of Tokyo, hey, I'm expecting the market to come back to the discount range at least, if not 50, at least the discount range. So now it's kind of like right here, if we're entering buys right here. So now let's just see. So this whole entire area, we're holding up. I don't want to look at the body, I mean the wicks of the candle. I'm not the wicks of the candle. I don't want to look at the wicks. I want to look at the bodies. So if you look at this is also another secret that I'm going to give you guys for your exits. If you look at this, you see how this candle basically opened up at the bottom underneath it. Whenever you have a candle that opens up underneath it, it does a complete opposite. A lot of people may look at it and be like, oh, it opened up, underneath it, so we're probably gonna go down. No, it does the opposite. That's also another really good extra point for me. Whenever I see that candle open up underneath this trend line to where you have the bodies at, that's also a good indication for me saying that the market's going to end up going up. So now this is where is Tokyo at? So Tokyo's right there. 04. Need that 06, 06, 06 right there. So now if we look at this, where's our other POI? Where's our other POI? Boom. Our other POI was a methane candle right here. If you look, this methane candle, and this is how you know that your methane candles are really going to take off, because if you look, your methane candle was actually traded underneath the bodies of the candles. So we actually took out this and formed a methane candle. Now, the purpose behind this and why they formed the methane candles underneath those candles of retail support is literally whenever they start closing out their trades right then and there, they already know what time they're going to be placing the trades. So whenever they close out their trades right then and there, what's going to happen is they're leaving a little bit of money on the table. That's all they're doing, leaving a little bit of money on the table. Like I said, for this one right here, the range was already coming down. So they didn't really have to fight back and forth. Sometimes that's why sometimes you would look and see that sometimes the methane candle kind of looks like almost like a doji in a way, or like a hammer. What do they call, like a pinhead, whatever, hammerhead, whatever. Sometimes it looked like that because it wasn't really no conflict between the bulls and the bears. That was just them, closing a little bit of their money right there. So basically just think of it like change. That's all it is. That's why sometimes when you see like them huge methane candles and like you'll see the body like this, and then you'll see a wick that just goes like that. Don't do those. Whenever you see those, the bank's lost a lot of money. I'm gonna just put it that way. Whenever you see the methane candles like that and the wicks are huge, leave that area alone. The bank's lost a lot of money. It's going to be a lot of manipulation trying to gain their funds right back. So just leave those alone and don't even bother that. So when I seen this on my T5, I was just like, okay, I guess we can go ahead and keep holding, because I mean that was our last POI, and we technically did take out the downside of Tokyo. We took out the downside of Tokyo, the bottom side of Tokyo. So now it's kind of like, okay, why would I not continue to hold? So now, as we take out the downside of Tokyo, if we look at this whole entire area, lower high, it was no POI at this lower high. So let's just say that if you were trying to get in right here at 08, if you're trying to sell at 08, this would be your exit point right here. Because if you look, this lower high does not exist. Because if you look, there's no POI to the left. It's none. Like I said, for you to get a valid lower high to put your stop loss above, it would have to bounce off the POI. But this right here didn't bounce off a POI. So guess what? I'm still gonna hold.
Got a
lot of trades right here. What do they call them? I think they call them boys, whatever, like smart money. Like they'll look at this, be like, oh, okay, and we have a lower high. So then after that, what they're gonna do, they're gonna place their shorts. And after they place their shorts, they're gonna go ahead and put them right above this lower high. And they're probably gonna, go ahead and take out the low range or something like that. So now they're in a trade. Damn, they got stopped out. We still in the trade though, so it doesn't really matter to us. So hey, they did what they're gonna do. They're gonna go ahead and back test, make the left side of the chart look really nice, like they did something, while we're still gonna be in the trade, and that's just how it's gonna work. So then now after that, let me go ahead and remove this. So then now after that, what time did this happen at? This is 10:35. And I'm keeping on the 5 minute too, so you guys can understand and get familiar with the 5 minute structure. Let's see, 1300 is coming up. So now this is 1330. No, 1330 right here. It's 1315 is next. So now right here, this is 1320, 1330 right there. So if you look, we've already pierced past our methane candle. We already pierced past it. This is another example of, okay, the market wants to continue to go up again. No, okay, we're good. If you look right here, we have a daily opening right here. Now, the daily opening was traded beneath it until we started trading above it. So now, if you look, the liquidity was never grabbed. This right here, like I said, is volume. The bodies of the candles volume. Daily opening is liquidity. So now we have liquidity right here plus volume. Now we need to go ahead and continue more liquidity. So now this is where you can come in and pull this whole entire area. I go to trying to go to 1 minute time frame. I do see a methane candle right here. This is actually really beautiful. So then now, if we go ahead right there, well, that whole entire, that's a wide area, I ain't gonna lie. But yeah. So then now, leaving 1330, 1330 can be a fake out. So now 1430 can actually be our real entry. So let's just mark out 1430. 1430 can be right here. There we go. A little shy after it. So now what we're going to look for 1600 because we're looking for it to enter the zone. So I know for sure that we can go ahead and exit out this trade around before 1600 because 1600 I'm expecting it to come back in. Boom. This whole entire area is cleared out. And I'm showing you guys a view on what I saw on my MT5 on what I call the trade for Euro. I'm going for 100 to 1. It's not 100 to 1 just yet. Not just yet, but I'm still holding the trade. So then after that, once that takes off, now you can see how we start closing above these highs. I mean, yeah, this high right here. So now we're continuing that structure. Now we have Tokyo. After we have Tokyo, we're consolidating. We're going to take out the lows first, or we're going to take out the highs. Once we're trading underneath the 50% of the range of Tokyo, more than likely we're going to lean more forward to taking out the lows. Boom, we took out the lows. You see that? We're trading underneath the 50% mark around Tokyo. We took out the lows first. After we take out the lows, we will take out the highs, and then we will go ahead and take out, go to the downside, and then continue up yet again. It's always going to do that. After all that's perfectly. If we look, this POI was already taken. This methane candle was already taken at this higher low. So if we look at this higher low, we already dipped beneath to take out the Tokyo session and also these false higher lows. So now we created a high. So now this range already did what it wanted to do. So now when we start trading to the downside, this will be taken out because it already did its job. It already did its job. So now we do have another daily opening right here. It's kind of fishy. So yeah, so you see how you have all of this back and forth, back and forth. So when you have all of this back and forth, and it's at a time that we should be entering, if you're in a sale, it's time to close out. Because whenever you see the market come down like this, make like a lower high, and then we get a spike, go up again, and another spike, go up again, and we get another spike, close out. It's time to go up. It's the consolidation point. A lot of traders that's selling because they're following the structure. So if you're following the structure, of course you will be selling. You would think this is resistance. You would think to put your stop loss right here, SL right here, and you get stopped out. Why is that? Because the market is tricking you. Just because you're in a downtrend doesn't mean that you sell. It doesn't. you're in the downtrend right here. Before the market even printed this, everybody would have thought that you're in a downtrend. I mean, yeah, some traders, I mean, yeah, they would have ended up doing that. I'm not going to be like, no traders not going to see that. Some will. But if you're looking right here, downtrend. And what did they do? What did they say? Follow the trend, follow the trend, follow the trend, follow the trend. Yeah. Now you're looking at the person that said follow the trend, like, damn, bro, you didn't cost me money, you know? Like, that's just how it is. Do you guys have any questions pertaining to that?
Yeah, I got a question, bro.
Mm-hmm.
Yeah, would you if you can find it, I'm sorry, I know you was going you were scrolling quite a bit, but when you were talking about the candle that closes what was that, under the
Yeah, I know. Yeah, I know
range?
what you're talking about. It's this one right here.
Okay, and it closes under the range, you're saying?
Yeah, so whenever let me give a better example. If we have a candle right here, and we have a candle right here, let's say that this candle is our methane candle. So let's just say this is our methane candle. Or it could be a little methane candle, I ain't gonna lie. And then this is another wick right here. And then we have this. And then we have this little small tiny wick. So now what's going to happen is we do have what retail traders call support. Once we get that candle that opens down below, just think of it as the complete opposite. Once we get that candle that opens up down below, think of it like this. They opened up. I'm gonna put this in a female sense because well males are scared of spiders too. But like I'm pretty sure you've seen it in scary movies so where like this woman's open up this bag or something like that, and then like let's just say like it's a bug in there or something like that, and she throws the chips. Just think of it like that. Once we open underneath this level, we're gonna go ahead and throw it to the opposite way because it's kind of like a fear almost in a way. I'm not gonna say a fear, but a lot of times the bank, believe it or not, everybody wants to be like the bank. The bank fears the bank is the dumbest money ever. If I tell you guys how much JP Morgan loses in a month, y'all would not believe it. The dumbest money ever. They make all their money on overdraft fees. That's all it is. Um, if you look at this area right here, once we close underneath this level, the market will pertain and go back right here, making a bullish candle right there. And then after that, then we will get a nice candle to go to the upside.
And that will happen. That will happen at the magic time too, correct?
It happens at the magic times. Sometimes it could be a 50-50, but sometimes this is like also a perfect exit point. Because any time where I'm not familiar with when I'll be like, I don't know if I should close, I don't know if I should keep it. I'll just go into like the 1 minute or the 5 minute or sometimes even the 15 minute. I don't really matter what time frame, but I like to do the 5 minute. And when I see down the 5 minute, the 1 minute, even the 30 seconds, yeah, I'm gonna close the trade. Because anytime I do decide to hold, it's just like I miss out. Like I lose more and more pips. So I'm just like, damn, I closed later than I wanted to. So like that's a really good indication to catch before you even know, because they say you can't predict the market. Once you actually know what's going on with the market and you understand the flow of it, it's like, yeah, you can predict it. Because if you can't predict it, you would never need to close out right here. Just like the example that I've given right here.
Got you.
Let's see. They said, how long after magic time do you give yourself to enter? Honestly, if I'm past my magic time, so like let's just say if my entry didn't happen at 14:30, at that time, I already know I'm in my sweet spot zone from 14:30 to 1600. So at that point, it's really just about where the POI is, where the nearest POI is. So yeah, so it's literally just understanding like, okay, where's your POI after that though? Don't just strictly depend on the time. You still gotta look for your POI and everything like that. Do you guys have any more questions pertaining to that?
Not really a question, but like a confirmation of what you just said. So you just basically got to wait between 14:30 to 1600 or whatever time the magic times is to see your confirmations, right?
Mhm.
Okay, perfect.
Exactly. So I said in the first Zoom, you mentioned 1 through 5 POIs, like you was going to rank them best to worst. I actually was, but I actually decided I'm not because I didn't want to, I didn't want people to look at both of them. So that's why I said the methane candles is literally the only thing that you would look for the POI. That and also like I said in the previous Zoom, your weight trade into the candle. Those are really good too, but definitely just methane candles. I didn't want to, confuse. I want to keep it as simple as possible because, like, especially me, like, whenever so much is going on, or like even like when we're in school, like when there's so much reading and it's just like smaller words and so much reading, sometimes you just kind of like drift off, and it's just like I don't like courses to where like they're completely just long, 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 long. It's kind of like, okay, bro, like, are you done? you know? So that's what it is. For that's gonna bleed into your emergency exit points. Um Stop, let me see. Do you use fair value gaps, for example, below your POIs? No, I don't use fair value gaps. Um they're good for targets though. I'm not even gonna cap. They're good for targets, but sometimes they will never get hit. So yeah. And that's why before when I went over it, I did the 0 and the hundreds, because the 0 and the hundreds was actually breaking down what's going to happen. Everybody thinks of a fair value gap like, oh, it's just gap in price or whatever they say. Like, no, you have to understand what happened, because once we close, like if we're in a selling position, once we close underneath that 0%, we never tap into that 100. That's how you know that fair value will never get breached into. Somebody said like yeah. I'm not even read that comment. That's funny. Let me see. So this is one too. So this is the next one. This is the stop loss placements. Yeah, and that's how your chart supposed to look at the work. So stop loss placement. Let me actually do it on US 30, because I don't think I traded US 30 last week. So what my main thing is to do for you guys is the stop loss placements. There we go. So let's just say that you have, let me do it this way. If you have a downtrend. So after each one of those lower highs, sometimes you would get a candle like this. You would get it to where it's red. Let's say this is the bullish candle. So the candle I'm marking in, this green one, this is bullish. So then now, once we get that wick right here, boom, and we get a wick down here. Now the next candle that we get can be like right here. Once we see that we have an even flat double bottom, that's also another good confluence. Sometimes it actually closes above it, but really your really strong confluence is going to be that even bottoms or even tops in it. And well, if they're at the top, it's going to be called even tops, double flat tops, or if they're at the bottoms, it's going to be called double flat bottoms. Yes or no? So now let's just say that's the bear candle. What I'm going to do, I'm going to pull this last candle, this last wick from that range, because if you guys look, this bearish candle already did the hunter's job. It already became the hunter's candle. So now when you already became for the hunter's candle, this already did its job. We already stopped out this bullish trend. So now once we already stopped out this bullish trend, well, my main focus is going to be, and I'm pretty sure sometimes like if you go back to like my page on Instagram, whatever, and look at my stop loss positions, like it'll make more sense to you guys and be like, oh, like, I never knew that. It's no point in me putting it above the longest wicks. Like I said, if we do come out and stop out that previous wick from the bullish trend, it ain't meant for us to be in that trade anymore. You can do it a few pips above, counting your spreads. It depends on how much your spreads were. But what's going to happen after that? Once we get once we get that stop, when it happens, sometimes your entry will come right here, and then we'll continue to go down. So just to give you guys an example on the charts, if we look at, let me see, where's a really good this I guess because this is a bullish trend right here. But if you look at this right here, you can see how that bullish candle came up. And that bullish candle came up right there. And like I said, a few pips right above it, you're safe. So if you look at this, it's kind of like, yeah, you know what? I want to zoom in. It's like we kind of took it out, but we kind of evened it out. We kind of took it out just a little bit low key, just a little bit. Some brokers may not even have taken that out, honestly. But if we look right there, our stop loss will look something like this. Our entry can be right there, and our stop loss can be just a few pips above it. Like I said, if we put it above here and we do trade past this range, it's like, why lose more money? It wouldn't make sense to lose more money. And in target, however far you want to, daily open doesn't really matter. Matter of fact, it does matter. Let's see what the daily opening is. Where's the daily? Oh, damn, why did I not trade this one? We do have a daily opening that did not get tapped into right here. Ooh, I'm trading that next week. So our next daily opening will be right here. So yeah, that's okay. That's what she tapped into there. All right. So now if you look, we can go ahead and go for our next daily opening. What day is this too? What day is this? What day is this? This is Thursday or reversal day. So I mean, like I said, I can't make this up, you guys. Like you guys see it. Oh, nice. Tokyo consolidation point. Boom. And I know a lot of you guys, I got a question saying that sometimes for CFDs, they start at 23. If it starts at 23, because the market closed, CFD market closes for an hour. So if it starts at 23, you're fine. Just use 23. You know, like don't freak out and be like, oh, it doesn't have no 22. You know, like, you know. But yeah, once the Tokyo stock is taken out, lows, wise should come down here because it's the daily opening, you get taken out, and then boom, flip right back past trading past this Tokyo high too, covering out this whole entire range. So yeah, let me give you guys another example. I like to just give you guys an example. If you look at this, you see how it has no bullish trend. So you know that's why that came to rally back into the daily opening. I need a trend. I need a bullish trend. There we go. So if you look right here, we can see that the market did a stop hunt after bullish trend was right here. Also, this is another emergency exit point. So whenever your trend is done and we do come into a POI, sometimes your POI can actually be right here. And the market will start to roll over right before it gets there because a lot of the time it tricks a lot of people to start selling early and then goes ahead and stops them out. So once that's done, now this is your emergency exit point. So now if you look at this, let's go ahead and pull that trend. As you guys see, we get a lot of wicks into it. Stop loss right above here just a little bit. Yeah, if you guys see this right here, you see how this is just rejecting it. That's not really a trend right there. And then we find a bearish trend now. I need a bearish trend. I guess it's a perfect example too. So if you look at this right here, this one didn't really stop us out. This is all still in trend. So this one was just really cliche in the textbook. Another one. Yeah, this is perfect right here. So if you guys look at this is one. Only way I'm gonna pick this one is because this one is kind of like tricky. And I want to show you guys the good, bad, and ugly. So if you look right here, a lot of the times you'd have probably been like, oh, the market, came down. The market came down right there, and it did stop us out. Not us in the trade, actually, but it just stopped out. So if you look, we do have this methane candle. Remember I told you, anytime you get a methane candle that passes it, the market is going to go ahead and reject. So if you look at this area right here, we have a long wick that rejected it. So now what we're going to do, we're going to go ahead and we're going to go and let's go to, I'm going to do FPG. There we go. So then if we come right here, let's go to the 5 minute, we have a methane candle. Why do we have this methane candle, and why do we want to pull this methane candle? Because this methane candle was formed in our POI to start taking buys off of that level. So then we could do it like this, but let's put more fun with it. We have another methane candle right there. So if you look right now, this methane candle was stopped out by the bears. So now that could be another instance of us having to go up. I already used FEG. Let me do hidden OP. That's a different color. Yes, it is. So then now, let's take it back to the 15 minute. Another pierce past this level and another pierce past this level. Let's see, was this the 5 minute that we did? So yeah, so to come for the other wick right there. So this is US30. So honestly, a lot of these brokers, they probably, I wouldn't be surprised if a lot of these wicks actually closed like right here, honestly. Because sometimes with CFDs, like your broker may show that price is right here when price is really up here. So that's the only bad thing about CFDs, honestly. But like I said, it's not really know which one's best. Like FXCM for Forex instruments, I like them because they actually correlate the openings of the banks and stuff like that. So really, you shouldn't be saying, what broker should I use for trading you. Find what broker is close to your brokerage price. That's what's really going to matter, because you're not placing trades on trading. Find out which broker is closest to your broker on your MT5 or MT4. All right, C trader. Why that? Oh, I think I already answered that. Why that particular MC candle in 1 minute did you find to, please? Yeah, I think I did. Just good thing. How many times did the market tap into daily opening? That's another question. It can do it 3 times. It can do it 5 times. You just gotta be patient. IDK, if you covered this, how do you know to let an MC get pierced instead of entering? That's honestly a good question. Sometimes when like your so this guy said IDK, if you covered this, but how do you know when you let an MC get pierced instead of just entering soon? So I will say this, if your MC is at a very discounted range, more than likely those will get pierced just a little bit, because it's kind of like they have to kind of compensate in that whole entire discount area. So those are going to be the ones to actually get pierced the most, but they're still going to be good to enter, honestly. Because like I said, those piercings still have to be formed as a failure to close. So it's kind of like this area right here. So this area right here is actually perfect. So it pierces to that MC candle a little bit, but then again, it goes off of that failure to close. So when it's like around like the 70% of the market, like 70% of that whole entire range, those like your best MC candles. But like the very top of the premium or very bottom of the discounts, sometimes have like a few pips wide over stop loss, basically just saying, because like I said, sometimes they have to compensate and like kind of manipulate price in that area to like kind of like make up for like the lost. Honestly, that's all it is. Do you guys have any more questions?
I have a quick question. Can you hear me?
Yeah, go ahead.
So in Euro USD, I was technically looking for a sell on Friday to potentially check out those lows. Now, the reason I was looking for that is because I saw a bunch of technically a liquidity pool in a sense, like in the area of support that was made during, let me see my screen real quick. Where is it? That I made around Thursday and Wednesday, where you took that buy setup right there at the bottom.
Right
So
here?
technically, yeah. So I wasn't looking to sell there. I took a sell on Friday around 11:30 UTC time to pretty much take out the lows of those areas because I would consider that liquidity. Wouldn't that be an area where the market could be magnetized to?
You said right here?
Yeah, 11:30.
Oh, 11:30.
UTC Friday. So yeah, right there. I was technically taking a sell to potentially take out those lows because I saw it as an area of liquidity. Wouldn't the market be magnetized to that area in a sense?
You talking about to take out the lows of this area?
Correct, because it looks like support to me in a sense.
Okay, so if you look at this, remember I said that Thursday is a reversal day?
Correct.
So this was your reversal right here. And you see how the market still closed above this whole entire area continuing structure? So therefore, we have this whole entire range that we need to go ahead and clear out. So whenever we start taking out these highs, lows, continuing that structure, it means that the market still has a lot of room to go up. So if we look at this area right here, the daily opening was already taken. This area right here, a lot of times, you could buy from these type of areas, but like it's no methane. It can probably be a methane candle in there. But what's going to happen is this is just volume. So we need liquidity now. So the market created liquidity right here, but it created liquidity off of a POI. So and we already started taking out highs. So it's kind of like we don't really need to take out this low just yet because it already did what it did. And this area, this higher low is actually supporting this whole entire, trend up. So it's kind of like whenever you do get that higher low and it is supporting like a heavy trend to the upside, that's definitely not going to be a low that can be take out.
Could that be an area that the market could potentially take out later on?
Oh yeah, definitely.
Okay, I got you. That makes sense. Thank you, man.
No problem.
Yo, Deshay, I got one more question.
Go ahead.
So I was the guy who just asked about the MC getting pierced and stuff like that. So how when you take your position, do a lot of times do you wait for it to get pierced and then you go on the lower time frame to see if it within that piercing did it make another MC within on the 1 minute or the 5 minute, like how you just showed us basically, and then you enter?
Yeah, sometimes not, because the market is always going to throw a 50% yes and a 50% no. So it's kind of like if you don't do that, then you can just wait on the 5 minute and see how the structure holds up. If it doesn't hold up, then you can look for the pierce. So it's kind of like it depends on what the market is doing at that time. But most of the time, honestly, like if I see if I see like a raggedy methane candle on the 5 minute,
right,
I'll just go to the 1 minute. And if the 1 minute isn't if the 1 minute still shows like a MC candle, I'll wait for price to get into that area. And then I go to the 30 seconds. If 30 seconds is too ugly, I'll go back to the 1 minute. So then 1 minute, I wait for it to tap into it. And then I go into the 30 seconds, because once we tap into a methane candle on the 1 minute, this is going to happen right now. So I won't lose you. So let's just say that this is a 1 minute methane candle. Let me see, let me go like this. So let's say this is the whole entire range right here, and then we have a methane candle right here.
Right.
So we have a methane candle right here. So to not get lost, you guys, this is the first. Or I could just go like this to make more sense. I go like that. There we go. So then now after that, that's already time frame 1. So now after time frame 1, you see how we tap into our methane candle. So now after time frame 1, now we're going to come ahead and make another methane candle on the 30 seconds for us to pull back into and then we can go up. So then now, basically, long story short, this is like a bulky methane candle on the 5 minute. And then once that methane candle is made on the 5 minute, we're gonna have to make another methane candle in that 5 minute. And this is gonna be like a 30-second methane candle, or 1 minute to 30-second methane candle. And those are the ones that I normally take the entries off of.
Okay, so it's kind of like you just have to
Refine
you
it.
want to add a few more pips to your SL? Like, do you want to add a few more pips to your SR, or do you want to wait? Type thing.
I just wait.
Okay.
Yeah, like this trade right here is like a 0.9 pip stop. It was only 1 pip. So I just let that ride, honestly, because like I said, that was, man, I don't know how much I basically would have lost nothing on the 30 lot, honestly. So I just let it run. So it's kind of like if I got stopped out, then honestly, I wouldn't even need the back test on why I got stopped out if I did, because it's kind of like I already saw it before it was, so it's just like I'm gonna let it play out. So it's like if I did get stopped out, it's kind of like I don't have to back test because I already saw both ends. So it's kind of like I already know why I did it in the first place, you know. Which, long story short, it just goes back with your intuition. If your gut feels like you need to do this in the market, follow that, because it is true.
Okay. Thank you.
Mm-hmm. You guys have any more questions? All right. So, oh wait, somebody was talking. I don't think. Let me see somebody. Although here service purpose, your option resume. Do you think we should study the most? Wait, I don't get what this one said. Although they are, I don't get it. Somebody said you get 10 in the Indian. Yeah. All right. So this is the last one. Like I said, honestly, starting Sunday opening. You know, you guys should be able to conquer the market. It's definitely starting February 1st. No homework for this one. Your homework is going to be all of February. All of February. So 30 days. So once that 31 day hit, that 31st day, that's where I want to see where the improvement was. So all of February is going to be your homework. Just killing the markets. How do you difference going with your gut versus trading trauma? Trading trauma and your gut is different. Trading trauma is just a lesson. You know, it's kind of like when people say they don't want to start over again and everything. Like, you're not starting over again. You're just starting over from where you last lost that. So now you kind of like have the upper hand to fix what you need to fix. So it's really no such thing as trading trauma. It's just everything, just like psychology, honestly. Like, just you know, don't let it fear you. Like, don't let it put fear in you, because it's like you're doing good. You're not going to go to prison from trading or anything bad. Like, you're doing good. So it's kind of like, you know, you always have to take some L's before you get to, you know, where you want to go to. So don't ever expect it to be just, you know, full and everything like that. But I will say, when you guys do become more and more profitable, if you aren't already, but once you guys do become more and more profitable and you start, you know, raising your lots and everything like that, even if you lose on those trades, you'll be just fine. You will be just fine. Because like I said, the main thing that you guys need to understand is when you guys lose it. If you guys lose $5,000 in 10 minutes, why the hell are you sad? You ain't sad if you win $10,000 in 5 minutes. You ain't sad if you win $15,000 in 5 minutes, but you sad if you lose 5,000 in 5-10 minutes. No, like, have the same energy. If you lost it that fast, go ahead and get it that fast. It literally, that's all it is. If you lose it that fast, you can gain it back that fast. Just stay with that same mindset and everything will be straight. Don't get mad off of losses and stuff like that. Literally. I think, let me see, I think it was like mid-December, I took like a 2.3 pip stop loss, whatever. I was literally laughing at it as I saw it come down to the stop loss, because it's just like, I don't even know why I placed the trade right there to begin with. But to me, it was like really funny, like comedy. But I ended up getting it right back like seconds later, literally seconds later. And I think I ended up TPing at like 122 pips or something like that. So it's kind of like, you know, like, it's literally just a funny laughing game in the market at this point, like, you know. So don't ever overthink it and be like, oh, it's this, I'm getting so stressed out about it. Like, no, it's just a mental thing. Like, don't let it live in your head rent free. Just treat it as a fun, it's a fun, it's a fun freedom for you guys to have. Don't treat it like it's a job at all. Can you make an extra tab? You mentioned further examples. Of course. Give me a few days so I can free up some stuff. I definitely will make that tab. But yeah, other than that, this is the final Zoom.
Hey,
When I do, oh, go ahead.
you ever gonna do any like live
I was actually
trade?
going to say that just now.
Yeah.
I will start making some time, and sometimes I'll like just randomly throw out Zoom links for like live trading and stuff like that. Wednesdays, I like to trade honestly, because Tuesday, if it sets the low on Tuesday, sometimes the low can actually be set in New York. So I don't really trade. I trade London on Tuesdays. I'm not gonna lie, but sometimes I'll probably just trade New York on Tuesdays because wherever the low is set at, like if we're buying and the low is set at New York on Tuesday, I can trade London Wednesday because London is just going to be a higher low, basically, if you really think about it. So, you know, I'll definitely trade London on Wednesdays, definitely, hands down. Sometimes maybe even Thursday, but for sure, London is strictly Wednesday for London for me.
But looking
Yeah.
forward to it.
Yeah, no, definitely. But yeah, other than that, I mean, go ham in the group, you guys. I do appreciate you guys. I do want to see you guys passing a lot of prop firms and even growing your actual you know, just growing your actual accounts, you know, not just trading accounts, but like your bank accounts, stuff like that, you know. So don't get deteriorated and be like, oh, you know, Forex this, like trading this, and then options this. Like, no, like you guys can make 6 figures in 1 month just off of trading alone. Like, don't let people be like, oh, how is this possible? Oh, is this your actual account? Like, no, the only reason they say it is because it sucks for them. They don't know how to get past that stage. So it's like when they see other people that actually conquer it and actually doing it, they don't think it's real because I mean, like they don't have that motivation for themselves or that drive, you know. So they already know that they can't do it. They already put it in their head, you know. So if you guys speak into existence, like I know where's he at? He was just on here. Like Jeffrey, honestly, Jeffrey is one of the most like he stays at it consistently. He speaks everything to existence. So a lot of people like if he were to post a 8-figure trading account next week, I wouldn't question it. Honestly, I would really think it's his because of the drive that he has and the way he speaks into his existence. So, I mean, like, that's the biggest thing, speaks into existence, and just make sure that you guys go on your trading, go ham, don't let anyone stop you. That's what it is. You guys got that? Type 1 if you guys got that. All right, so I want to see everybody profiting in here. Every single person. If you guys need any help, do not be afraid to put it in the chat. Nobody's going to make fun of you. If anybody makes fun of you, I'm going to remove my damn self. So nobody's going to make fun of you because it's all a learning process. It's like, you know, like who's going to make fun of you in a learning process, you know? So, yeah. Other than that, I will end this one. All the Zooms will be confined in a folder. Like I said, it's taking a while because I have to do other stuff. I'm rarely on this laptop. So it's kind of like, you know, like I'm going to make sure I get everything taken care of this week so I can actually, you know, go ahead and get the Zooms to you guys. I know it's kind of like been way too long, but yeah, other than that, I'm gonna go ahead and end it. 2023, fuck the year profits. Today, it's actually tomorrow, starting January 22nd, market opening. That's where y'all gonna start making profits. Don't wait for the whole entire year. What he say? He said, do it right now. You spend all day on the phone anyhow. Why don't you go to, you know, pick up the phone and start placing profits that's going to determine your future? That's all. I'm gonna end it. All right.